Converge conference at CNBC. And good morning to you, Mr. Secretary in Washington. Thank you for joining us.
Good morning, Sarah.
Well, let's start right there, because Carl just went through the markets. It's another sort of turbulent day here. The volatility has really picked up. We're down another more than 3.5% for the week, almost 10% from the recent highs. I know that you guys have brushed this off, but I do wonder if you're starting to get concerned now that these losses are picking up.
Well, look, Sarah, what we're focused on is we're focused on the real economy. Can we create an environment where there are long-term gains in the market and long-term gains for the American people? I think, having been in the markets for 35 years, I know the market is prone to big unwinds like this. I think we've seen a lot of position unwinding, and I can't really speak to that.
I guess, and this has been consistent with your view, but 62% of Americans own stocks. I mean, it's near 20-year high. So how can the White House not be concerned about hardworking Americans' 401k plans?
Look, Sarah, I didn't say we're not concerned. I'm not concerned about a little bit of volatility over 3 weeks, because if you look over the long term, the reason stocks are a safe and great investment is because you're looking over the long term. If you start looking at micro horizons, stocks become very risky. So we are focused over the medium long term, and I can't tell you that the market's going to go up today, tomorrow, next week, but I can tell you that if we put proper policies in place, it's going to lay the groundwork for both real income gains and job gains and continued asset gains.
Understood that you're focused on the long term, and part of it is these tariffs, but now there's concerns about a possible government shutdown. Senate Minority Leader Chuck Schumer saying the Democrats are going to reject a government funding bill. We have this deadline tomorrow night. What is your expectation, Mr. Secretary, and how destructive would this be?
Well, it'd be incredibly disruptive. And look, Sarah, I know you said you've been in Singapore all week, but I think the underreported story of since January 20th and of the past few weeks is this incredible Republican unity and this Democratic disarray. Is that we've seen Speaker Johnson get through with President Trump's help a tax bill, get it over the Senate. We saw a clean CR bill. And if Senator Schumer wants to reject it, hurt the American people, close down the government, and they're going to own any of the problems that go with it, including economic slowdown. And if this is all they got, then they ought to regather and think about what they're doing to the American people and the economy.
You do think that a shutdown would cause economic harm?
It can't be good.
Yeah. I mean, look, the market's been really focused on tariffs, Mr. Secretary, and it's been another sort of up and down ride this week. A lot of uncertainty among business leaders. This morning, President Trump threatened a 200% tariff on Europe on wines, champagnes, and alcoholic products coming out of France and other EU countries. And I do wonder how that comes to be. Was this premeditated? Did you know about this? This is in retaliation to what Europe did, in retaliation to the steel and aluminum tariffs, but 200%?
Look, I was with the Business Roundtable yesterday. I think it was 135 CEOs, and I talked to them about our plan, which includes tariffs, deregulation, and what I call reprivatizing the government and bringing down this incredible level of government spending. And one or two items with one trading block, I'm not sure why that's a big deal for the markets.
I think that the big deal for the market is just the not knowing what's next and what the target is necessarily going to be, and also not knowing where this stops. Because if we ratchet up tariffs, they retaliate, we go higher, then what?
Well, look, sir, it could go the other way too. Look, that's the nature of these reciprocal tariffs. That all President Trump is asking is for countries to take take theirs off. So we have identified some strategic industries, the steel, aluminum, likely autos, but everything else is up for grabs, and that's going to be a decision that's made by our trading partners.
Yeah, that was one of my questions, which is how these tariffs come off, if that is ultimately the goal, because it feels like once they go on, it just gets out of control from there.
Well, again, that's a decision by our trading partners if they want to ratchet things up. And I could tell you, as somebody who's studied the history of this, it is the surplus country that takes the greatest hit. We have a big trade deficit with these countries. So in the event that there's a back and forth with tariffs, I would counsel these government leaders that they are on the losing side of this argument economically.